Welcome to Barron's Roundtable, where we get behind the headlines to prepare you for the week ahead. I'm Jack Otter. Coming up, the AI threat shaking big tech, how Microsoft plans to survive the so-called SaaSpocalypse. And as the conflict in Iran rattles global markets, are defense stocks still the smart move? We begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Josh Schafer, Megan Leonard, and Jacob Sonnenschein. So, Josh, occasionally, rarely but occasionally, people on television talking about the market are accused of oversimplifying things. In this case, I think it was pretty simple what moved stocks this week.
One chart. The stock market is one chart right now, Jack, and it is oil. I guess we could call it two charts, right, if we want to talk about Brent crude or West Texas Intermediate. But essentially, the movement right now in the stock market is oil up, stocks down, right? Or oil down, stocks up, which we did see for one brief day, really only a couple hours.
After an errant tweet.
Right, really only a couple hours. But really that's been the driver right now, and that's why stocks close lower on the week, is oil continues to move higher. You have oil ending the week hovering around $100 a barrel. That's been the key driver. I mean, you only had 120 stocks in the S&P 500 even in the green this week, so pretty widespread selling. One of the only things working right now, XLE, energy, right? That's what works when oil goes up. But I think what's been interesting too, not having a lot of safe haven trades work right now, right? You've got a treasury market sell off, 10-year treasury yield is up over 30 basis points over the last couple of weeks. Take a look at gold. Gold's down about 3%, more than 3% since the conflict started. And so I think when you flip over to something in Megan's world here, you normally look for the macro to help you, right? It's, all right, well, maybe the Fed will cut rates. Maybe that's something that might help us out here. And it seems like the narrative's really kind of been the opposite at this point.
The Fed is not coming to the rescue this time around. We have the Fed meeting next week, the big policy meeting, and we're expecting rates to remain steady. So this is something that is really going to, not shift markets. It's pretty well telegraphed at this point.
So the disruption trade took a backseat this week also, which is, I guess, good news for software stocks, but maybe there's only just one earnings report that did that. So,
okay, we're looking for something to help make stocks go higher here. Where's AI? I thought AI did that, right? When the market's not working, normally you get like, oh, like this company said this good thing about AI. So Oracle did, right? Oracle came out with their earnings. They were able to impress the street. Management was able to talk about how AI isn't going to disrupt their business. Stock went up 10% on the next day after earnings. Didn't help the rest of software, right? You saw Adobe lower on the week, their CEO is departing. So I think what we're learning about the AI trade now, a lot more winners and losers than it used to be. It's not just, oh, AI demand, number go up, right? The market's starting to shift a little bit here.
Yeah, oil is chuckling and saying, you new kids thought you knew what was going on, but I still rule. So Megan, you just gave me really bad news, which is that the Federal Reserve is not going to ride to the rescue. Historically, that's often how these things resolve themselves, is with a policy move. In fact, poly market odds of a cut have been going down quite a bit in the last few weeks.
Poly market and regular market odds have been going down as well. Yes. It's funny because we did actually think, June cut, when we get that new chairman in, all of that good stuff. It's really shifted to maybe September at this point. And that boils down to a couple of different issues right now. You've got these rising oil prices, but you've got elevated inflation already. Remember, it's been 5 years since we've been at that 2% target that the Fed likes to hit. And so this oil shock is just going to continue to roil that. We've got some pass-through coming through. We did actually get the latest number for the Fed's preferred gauge on Friday, and it wasn't good. We had 3.1% on core PCE inflation. That's not a good number, especially before all of this oil comes into play.
You mentioned the new Fed chairman. Those odds actually increased on Friday with some news out of the courts.
Yes, we did get some interesting news where a judge actually threw out those subpoenas that the Fed was going to have to be answerable to. So this actually may clear the way for that Warsh nomination to go through, assuming that the legal wrangling doesn't get in the way, of course.
Let's keep on talking about oil a little bit. So, of course, oil is important in that it is an input for so many goods prices, but it actually goes beyond that behaviorally. It's the only thing where when you're driving down the highway, you see the price in 4-foot-high letters. Can you talk about the dynamic of oil in the market?
It's a psychological barrier for sure. It's one of those situations where oil is, a consumer issue. It's a business issue. This is something that's going to be in play for a while now.
Let's go to missiles. Jacob, the U.S. has been firing a lot of them into Iran. Defense stocks appear to have anticipated this and had a good run earlier in the year. Tell us where that stands.
Yeah, and obviously, since February 27th, the Iran conflict flared up. Not much of a run, but a lot year to date. Lockheed Martin, Raytheon, L3 Harris, those are three big manufacturers that get a lot of their business from making those missiles and selling them to government entities. So With that said, those stocks, I think, still overall have been up a lot. You look at their charts, they look parabolic of or relating to a parabola going straight up. So wait.
Thank you for that definition.
No problem. Wait for a little bit of a pullback. But the Iran issue highlights the secular growth, the long-term growth of this type of military spending. So look for a pullback in these stocks.
Okay. And real quick, it's not just bomb makers. Palantir up a lot. Do you still like it here?
Yeah, I mean, it's had this like 17% bounce from its bottom in February, but it gets half its business from the government.
Alrighty. Thank you, guys.